Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, May 1st, 2016. Hope you guys are having a fantastic weekend. And let's get started. So we saw some follow through on Friday. It could have been a lot worse than it was. We were trying to break some, the first levels of support, let's say, where I was saying for the Bears to get anything going, they were going to have to push the S&P through the 2070. So they did that. Really, the big line in the sand, though, I'm saying where your bull bear line is going to be this support right here. So the Bears still have a lot of work to be done. But when you look at the bearish divergences, the wave counts, and what a typical retracement would be, it would suggest that we still have more weakness to follow. But right now we have support right at the 2035 level. So if they bring it down, this is going to probably be where we see some buyers come in. If they come in on Monday and start buying, then really this is the area right here. I would say right around that 2088 that the bears need to hold. And if they don't, then there's a chance that we're just going to come up and maybe do a back test of the broken wedge here. So the patterns and the technicals are not bullish, but we still the Bears need some work to be done before we can really see some downside momentum pick up. So let's take a look at the 60-minute chart. Again, just a set of bearish divergences. We did break through this support, so this is where I was saying that bull bear line is. So the Bears need to push it through this. And if they do that, that's when we start anticipating that some of these retracements will be in play. We're pretty oversold right now, but we don't have any bullish divergences. That hasn't really stopped the bulls from making a run. So it's not one of those things. It seems like the bearish divergences, even though they take a little bit longer to play out, when we're in the type of market that we've been in, where it's pretty much been straight up. A lot of times you don't get bullish divergences, and they just kind of scream it higher. But like I said, as far as with the wave counts and the technicals and everything that's going on, it would make more sense if we head lower before higher. And really, if they come in on Monday and start buying again, that 2085 is going to be the resistance area. I think we will see sellers there. And then from there, we have to see how the bulls react if we get down to this 2032 level. But being that we're pretty oversold right now, it may not be the best time to be jumping in with new shorts. On a 15-minute chart, here you can see we made it down to almost to the 78% retracement level. We're finally out of this range. We could say we have some bullish divergences because we made a little bit of a lower low on the S&P. As the price oscillator was heading up, so that would indicate that we could we'd leave the door open for a possible bounce on Monday, and especially since the 15-minute and the 60-minute charts are pretty overextended, it would probably make sense to see some backing and filling from this drop, and really the overall movement as far as price wise. Should be to the downside. So let's take a look at just some of our regular the internals, and this is we're just starting to break down now. So there's the Bears have a full tank of gas if they do want to start something to the downside. So there's plenty of room. Nothing's even close to being oversold. As far as with the VIX and the S&P, you can see that we're still. The S&P, the VIX is coming off support as the S&P was hitting resistance, and the VIX had bullish divergences. Taking a look at the put-call ratio, you can see that there was a little bit of panic on Friday. We saw some put buying. And then this is the other thing is the bullish percent, and you can see this is starting to break down a little bit too. So there's still plenty of room to go before we get into the oversold level. So the internals are, also suggesting that we should see some more downside. We just kind of have to wait and see what the market is going to do for us. But this is the pattern that I was showing you from the previous rallies that we had. And again, it was just going to this previous high was where the rally went to. And that's exactly what this happened here. So if it is going to follow this pattern, you can see we probably have a lot more room to go before we get see some kind of decent sized bounce. But again, this is a fractal pattern that you just watch. You don't trade off of it. It's kind of like clues of what could play out, but it's not, something that's guaranteed. So right now, let's see what plays out on Monday. Like I said, if we get some kind of a little bounce early on, it would probably make sense. We really want to see the Bears hold the S&P below the 2085 and the 2088 level. So with that, enjoy the rest of your weekend, and I'll talk to you guys tomorrow.